Hello and good day I bid to you. So today I am going to present on the lab exercise 4 that I have done, okay, in my course DPA 10023 Computer Application in Accounting. Okay, so my name is SRIRAAM son of Ramayah with registration number 01D8021F1039. I am from Group 1 D81AK2 and my course lecturer is Puan Siti Zubaida binti Madhami. So what am I going to present to all of you today? So basically I am going to present about type of business entities and some functions about general journal. Okay, we are going to know about all of this today. So business entities. Okay, so we have three types of business entities here. What are they? So we have sole proprietorship, we have partnership, and we have company. Exactly. Look, they are flying inside. Okay, so we are going to know some briefing about three of these business entities. Okay, so what is sole proprietorship? Basically, sole proprietorship is a business entity that conducted or managed by only one owner. So all of the risk of the business or the profit of the business or the loss of the business will only be considered and managed by the only owner. So it is risky, but there is nothing that doesn't have its own risk. So that is about some briefing about sole proprietorship. Next, we are going to see about partnership. So what is partnership? Okay, partnership is basically a business entity that are conducted or managed by more than one owners, such as from 2 to 20 owners. There are some examples that I could state here. For example, we have Clinic Abu and Friends or Clinic Ali and Ahmad. So this name, when you can see here, these are the business entity that conducted by more than one owner. Okay, so most probably clinics are clinics that conducted by own are mostly conducted by the partners together. Okay, so other than that, we have company is the business entity that conducted more than one owner, but in a what we call that, in a good way or in a professional way. For example, we have Gold Coast Sendirian Berhad. Okay, so that is the type of business entities that we have here. So I have included for you about separate entity concept. If you press the link here, you can see the YouTube video on the separate entity concept. They will explain about the one of the accounting concept here, which is separate entity concept, on the rules of why we should apply separate entity concept in all the business entities, and what is the reason and what is actually separate entity concept is. So from this video, I have learned separate entity concept is a concept that should be applied so that we won't mix our personal calculations or our personal expenses or our personal stuff with our business stuff. So that is separate entity concept. So you will learn more about this when you watch this video. Okay, so I have stated the hyperlink here for you. Okay, next, what are we going to look on is about general journal. Yes, we are going to look on the general journal. So there are some explanations or briefing that I'm going to give to you. Okay, so what is a general journal? A general journal is a book of original entries in which accountants and bookkeepers record raw business transactions in chronological order. Means This is a book of original entries where accountants or bookkeepers they will record the raw business transactions in chronological order. What is in chronological order? The in chronological order means from the first date of a month until the end of the month, or from yes, like that. For example, from 1st January until 31st January. Okay. Then, a general journal is the first place where data is recorded, and each page contains dividing columns for dates, serial numbers, and debit or credit records, which means general journal will be the first place where we will record the accounting data or accounting information, and each page of the journal have its own dividing columns for the dates, for the serial numbers of the source of documents where we collect the accounting data or the accounting information, and then the serial number I have stated, it is actually the source documents number, where we collected the transactions data, and then debit and credit records, which is the figures or the amount that is involved. Okay, a general journal is a day book or subsidiary journal that records transactions such as adjustment entries, and you know we have some examples. Okay, what records or transactions that are stated in the general journal most of the time, so such as adjustment entries, opening stock, depreciation, accounting errors, and so on. Means that a general journal, okay, is a day book or subsidiary journal. It is actually does not use most of the time, but it is used for the records that involve adjustment. If we do any mistakes in while we record the accounting data or accounting information, we must do adjustment for it. And then opening stock, when we start the business at the first date of the month or of the year. And then depreciation, which means the record of the depreciation expenses. Accounting errors, we will rectify our accounting errors through the general journal. Okay, so journals are actually what is mainly journal is. Okay, what are journals? Journals are prime entry books, also known as book of original entry, because transactions were written in them before being manually posted to accounts in the general ledger or a subsidiary ledger. Means here is journals are prime entry books, which means a book of original entry. Okay, so it is the first place where we record all the transaction or accounting data, accounting information before we post it into the ledger accounts, whether it is general ledger or a subsidiary ledger. Okay, and we have two types of journals: general journal and special journal. Okay, so what is general journal? General journal is a book of original entries that we record non-routine transactions for which there is no special journal. The recording or the data or the transaction that we cannot record in the special journal, we will record in the general journal. That is the meaning here. Okay, so we have the example of general journal here. Okay, so what is the example that is given here? The example that is given here is about the recording of depreciation expenses. Okay, so if we can see here, this is the general journal sheet from the Excel, and I done it in table form. Okay, so we have the numbering of the sheet number 15. Mostly we will do this because in the business we will have more than one pages of the recording of the accounting data or transaction. So we have date column, account column, reference column, debit and credit side. So This is the recording of depreciation expenses. Debit side 4,000 and credit side is accumulated depreciation 4,000. That records the depreciation for November 2000. So that's all from me. Thank you so much.